Good afternoon, ladies and gentlemen from Germany. It's raining heavy outside. Let's see if we can also have rain today for the last trading day of this week at the stock markets. Let's begin with the news here for today with core durable goods orders in about 4 minutes, and later FOMC member Ballard will speak. We will have manufacturing PMI. And yeah, that's it for today. This week is pretty heavy filled with news, but for the next week we will also have some major news, especially on Tuesday, CB consumer confidence, pending home sales on Wednesday, and here Thursday will be important with GDP, and on Friday we will have core PCE price index, so more data from the inflation side here. Let's go directly into the market here before the news. Nasdaq is down a little bit today, pre-market. Let's see it on a daily time frame here. Oh, what's this? Zoom out a little bit to see more. Let's just erase these Fibonacci's to see more. So it's the fourth consecutive day in a sideways range here. On Wednesday we had the high point at 13,081.75 points. Yesterday we tried to go back to these high points but didn't reach them. 13,031.5 points was the high. Then we went to lower levels, almost erased all the gains, and then for the final hour we went higher and closed where we opened on Wednesday. So today we are in the red a little bit, as you can see. I will show you on a 15-minute time frame what volatility we had in the previous 2 trading days. Look at this on the interest rate decision day here. We live streamed this together. Sorry. And then during the Asian and European session we had a rally which was taking off here when the US market opened until we reached the high point here, and then we had a sell-off. Look at this big sell-off here, and we erased almost all the profits and almost retested the lows from Wednesday. But then for the final trading hour we tried to go higher and closed near the 12,850 level. So today a little bit lower, below 12,800. Some bad news from the banking sector. German bank Deutsche Bank is sliding here. I will bring up this chart for you. So yesterday we had the bad news from Block, so previously named Square. There was a short seller report from Hindenburg Research. The stock went down, I think it was about 20%, but then recovered a little bit, 22%, then recovered a little bit and closed at about, what was it, $61.50, and is down pre-market about 2% again. So Hindenburg was right with the previous short sales with Nikola and Wirecard and some other stocks. So I wouldn't say it's nothing, but of course they want to make trouble because they are short sellers. So that's just normal that they are sometimes over exaggerating a little bit in their reports. But I wouldn't say that this is nothing. So yeah, you have to be cautious if you are an investor of Block, like Katie Wood is, for example. So she just bought in Block, and now there is this short report. Yeah, no good news for the tech stock investors here. So let's see if we can also bring down the whole market here for Nasdaq with the news from durable goods here in about 1 minute. 1 minute left. Let's go to today. After the news we will have a look at the interest rate expectations. So let's see this on a 1 minute time frame so that we can see if there is a move. And then we will have a look at Deutsche Bank. "20 seconds. "5 seconds. Let's see if there is a movement. News are out. Core durable goods orders a lot lower than expected. Look at this. Forecast was positive and the outcome is negative, so this should be bullish in terms of interest rate expectations. Lower inflation risk, lower interest rate expectations. So let's look at the expected interest rate for the next Federal Reserve meeting in 40 days. Market is expecting with about 85% probability that we already reached the high point and there's no change. Only 15% are expecting a rate hike of 25 basis points. So here the probabilities for the whole year. You see the current level will be held in May. This is the current expectation, and then we will see a drop by 72% expectation in June back to 4.75% and more drops until the end of the year, so that we will end at 3.75% with a 40% probability in December 2023. So this is interesting. We talked about this yesterday because the Fed dots implicated that we will stay at 5% or even higher. 5.1% is the expectancy from the Federal Reserve members, from the FOMC members, for the end of the year 2023. So this is a big discrepancy between the expectations of the market, and we will see who is right, but I wouldn't bet against the market and rather bet that the FOMC members are wrong, because when we see a deeper recession than expected, then probably Federal Reserve will have to go lower with the interest rates, and there should be lower inflation rates incoming in the next weeks. So let's see this. Almost no market reaction here, just a little bit positive. Yes, the numbers are better than expected in terms of lower than expected, but if the market is weak and we have bad news from the banking sector, then this can be worse here for today for the markets. So let's see Deutsche Bank. The credit default swaps, CDS prices were going through the roof yesterday, and therefore the bank stocks are dropping right now. I will just bring up Deutsche Bank that we can see what happened here. Deutsche Bank, let's see this on a German stock exchange, Frankfurt. Let's see it on a 50-minute time frame. So we see that the implied volatility is rising. Look at this, 126% implied volatility, and the stock dropped back to €8 today. Yesterday it closed at €9. So this is a big drop here of 10% for a bank stock. And this is one of the biggest banks in Germany here and a part of German DAX 40. So you see it already dropped a lot since the beginning of the year. So this was the beginning of the year here, and it already lost 23.9% since the beginning of this year and since the beginning of March. So this was here. Since the beginning of March, it already lost 32%, so 1/3 of its value. And you see this huge drop here. But it's interesting in terms of the implied volatility, because as an option trader, I'm always looking at implied volatility, because when everyone is in fear, I can make some money of it. So let's have a look at the option prices on the Eurex exchange. That's a little bit a problem always with the Eurex, because the costs are higher and the difference between bid-ask spread are bigger. I would already trade the May options, so 56 days until expiration. Normally I trade 45 days, but the April is already expiring here in 28 days. So I would rather take a little bit longer here as a timeline, and then look for the first standard deviation at the delta 16. And this is about here, €5.50 strike or €5 strike, and you would still get for a 5.50 strike about 60 euro cents per option. So for the whole contract, €60. Not bad, but you see this big spread between bid and ask, 51 cents to 69 cents. That's not really attractive to trade for German for one of the biggest German stocks here in German DAX. This is not really attractive to trade, even if the implied volatility is high with 100% here. Let's see this again for April, 123% for April. So here you can get delta 16 for about 40 cents, the €5.50 strike. But the spread is the same, not really interesting to trade. We have some differences here in terms of option trading, because we have not only the options with American style, so you can exercise every time you want, but we also have these with the E at the end, indicating a European style option. So these can always only exercised at the end on April 21st when there is the expiration, and not during the trading, and therefore you have to wait for expiration to exercise if you want to exercise. But the problem here is the liquidity. It's even worse. If you look here, you don't have the lower strikes here. You see the differences between the strikes are even worse here. So it's here 10-cent difference between the strikes, but then you will have 50 cents and no lower strikes here. Therefore it's not really interesting to trade these European style options, and in terms of liquidity you see there's almost no open interest here. So I would always prefer to trade the American style options. You see there's a lot more open interest here for these stock options here on Deutsche Bank. Okay, back to the market, then see your questions. So a little bit rising here, news were good for the market, but we will prepare now for the opening in about an hour. So let's see the high and low point to see some major resistance and support levels. So the high point from pre-market when the European markets opened was here, 12,921 points. This was about the high point here yesterday before the closing. Then the low point was right before the news here at 12,753. This was about the low point yesterday, so it's an interesting range here, which could be important when the US market opens. If we see a further rally, then probably we will see here at resistance. If we see a sell-off, then this could be a smaller support. So let's draw an area. So this could be an area of support here, and this should be an area of resistance here. If we draw some Fibonacci's here, let's just do this really quick. So I would use the previous high point from Wednesday and go to the previous lows from March 12th. Then we get these Fibonacci levels, and I would look at them on some lower time frames. So you see there is a Fibonacci level 23.6%, and it already acted as a support and still acting as a support. Yes, we sold below, but just to trigger some stop losses, and then buyers stepped back in. Doesn't have to hold. If we see more selling pressure, then of course we can sell below. But you see the next high point would be the previous high from Wednesday. So let's see the lower points on a higher time frame, like 1 hour. The next low point as a target to the downside would be 12,584 points. This could be an interesting target. If we see a breakdown below the lows of Wednesday or the lows of yesterday, then there is some downside potential of about 1% here, just below the 12,600 points level. I want to stick to my shorts because normally we see a 50% retracement here. This would be right below the 12,500 level at 12,482 points. But I will close a little bit earlier, right in front of the 12,500 points level. So 12,510 points is my target where I want to close my shorts. And you see there was a previous low here in this area, which was at 12,525 points. So this is my main target to close a bigger chunk of my short position, and the rest I can hold, because if we see more downside potential, I will still be in this trade here. Yes, Nasdaq is looking more bullish than ES future or S&P 500. We reached the previous highs from February 2nd, but yeah, it was a really big rally here, 10% in just 1.5 weeks. So normally we see some correction to the downside, even if it's more bullish than, for example, ES future. Let's see ES here. So ES on a daily time frame, you clearly see this was the high point from February 2nd, and then we made lower highs, lower highs, lower highs. So we didn't get back even to the previous high point from March 6th. So this is showing and indicating signs of weakness here. Oh, let's draw a line here. So you can clearly see that this is a downtrend here. And as soon as we go below the previous lows from March 12th, then there should be more downside potential. We are trading below the 200 SMA level here on a daily time frame. So this is a pretty weak sign here for the market overall for S&P 500, because there are more smaller stocks in this index, and these are sold off even more than the bigger ones like in NASDAQ with the 100 largest tech stocks. So now to the chat and to your questions. Got you in my ear on the bike on my way home. Yeah, nice to hear, Richard. Never miss the streams. It's really cool that I have some fans like you. NQ, look at advanced decline line, potential top to the downside. Yeah, this was cool. So hopefully we will see the same sell-off like we have seen here in S&P 500, and see further downside potential for NASDAQ as well, as we already have seen here in S&P 500. Let's go to the commodities. Let's begin with crude oil. Crude oil was yesterday pulling back into this resistance zone. We talked about this in the previous streams. We have already seen on Wednesday a pullback into this area, and yesterday we tried to go a little higher, but then big sell-off, and then look at this candle here. It was a clear doji, and I asked myself when we were here, should I close my 50 strike short put with 55% in the green? But unfortunately I didn't close the trade. Now I gave back a little bit of the profits today because it's already down 4%. So you see the market is moving big, and also crude oil is moving big here. Nothing special, just a rejection here because it acts as a resistance. We talked about this in the previous streams. Pretty clear. There will probably be a retest of the 65 area here. Still far away from my 50 strike put, but probably I will give up some more profits. Should have been better getting out yesterday and then waiting for lower levels and better prices to re-enter this trade, but that's it. Sometimes, not all my trades are on point like my NASDAQ trades on Wednesday. But I have some good news from other commodities, but let's talk about these later. Let's just go on with natural gas. Where's my natural gas chart? Here. So natural gas finally in the green today, 2% after 2 consecutive red days. So we had this big push from the lows here with a double bottom at $2.24 on Tuesday. Then the sell-off again on Wednesday, and yesterday, Thursday, again a red day here. Still trading sideways here around these near these previous low points, but I still think this could be a double bottom. We have to wait if it finally can settle here and go from here to new highs. So 250 would be a minimum target here. I'm still in a short put position, so time is in my favor, but of course I don't want to break below 225, or I will go out and manage my short put position and strangle it. So strangling means selling a new call here at a higher strike and selling a new put at a lower strike for not being too much at risk if we see lower levels here in natural gas prices. So now the good news with wheat. We talked about this yesterday. I entered a wheat position, and now look here. Oh, I have to show you outside regular trading hours. Look at this. Yesterday we had this nice candle here showing the possible movement to the upside, and now we see pre-market. So you can trade wheat. Here I will show you the trading hours. Calendar. Here are the trading hours for wheat. So we see it's beginning at here's my time, and this is my local time. This is the time of the stock exchange in Chicago. So we see here local time beginning at 7 p.m. until 7:45 a.m. and then just a small trading pause of 45 minutes, and then it resumes at 8:30 a.m. and ends at 1:20 p.m. and begins again at 7 p.m. So not today because there's a weekend, but on Monday. So my local time here for trading is 1 a.m. to 1:45 p.m. and beginning again at 2:30 p.m. until 7:20 p.m. So this is still pre-market, but in about 45 minutes we will have the regular trading hours beginning, and then there should be even more volume. And let's see if we finally can close this gap. I was talking about it, so I will just show you this gap from outside of regular trading hours here. It wasn't traded during the regular trading hours on Wednesday, and you now see we almost closed this gap here, so I can finally close the long future position. I would wait for the market open in 45 minutes and then see if we can see a further push to the upside. Then I will close my long futures immediately and take the profit. So this is a nice profit here of 2.7%, which I could just made in 2 trading days, and I will stick to my risk reversal. So my risk reversal is a long call, 700 strike long call, and a 585 short put, so it's a lot lower than the current price level. I drew this yesterday here, so when we go above 700 at expiration, I will make money here, and if we go below 585 on expiration, then I will lose money, and in the middle I will just lose a small amount. But I don't want to hold this one until expiration, which is in May. I want to close it in the next 3 or 4 weeks. But maybe we'll see a retest of the previous highs and maybe even go above. So you see the next target if you use Fibonacci here between these 2 points and see the Fibonacci extension. This is one of the previous sell-off points here, 161.8% Fibonacci could be here, the 740 area. This would be really nice for my 700 long call if we could go back up to this level. But I will be in this position for a longer time frame. So it's a swing trade. I will probably be here in this trade for 2 to 4 weeks. Let's see how far we can go back to the upside here. And the futures will be closed probably today on market open. So nice trade. Yeah, move on with sugar, Ralph. Yes, we will talk about the other trades I have open with sugar here. So sugar is also trading to the downside finally. This was what I was waiting for. Hopefully this is now the double top here. So you see this was a previous top, and we had the 2 days where we couldn't move above these $21.30 level. So the highest point was $21.38, and today sell-off of 0.9%. So hopefully we will retest the previous lows and go below. Then finally this is the sign for a further sell-off, which I was waiting for, but I was too early in this trade. I entered at $20.58, so I'm still a little bit in the red, but almost break even now. And yeah, hopefully we can go back here to this previous low points. Here, this is my main target, these previous low points here around $19.60. I will take some profits when we see the first breakthrough, and then the rest here at $19.60. Orange juice, let's see, orange juice. I also have a short position here, but it's moving to the upside again in this sideways area. So still below 245 cents, but trading to the upside 2.9% today. Ralph thinks I close my short call and strangle again in a fat day. Yeah, sometimes it's better because we have really big moves in these days. If you compare the moves from this week and the previous week here, look at these candles, really big candles to the up and down side. If you compare these to the February candles, these were a lot smaller ones. So the volatility has gone up, and we also see this if we look at the VIX index. Where's my chart here? So there we clearly see the big difference within a trading day for the volatility, the implied volatility, so the expectancy for the move of S&P 500 in the next 30 trading days is changing a lot within a day. Look at this, where the breakout was here on March the 9th. We went from 19 level here up to 30 or above 30. 30.8 was the high point, and look at these big intraday reverses for the implied volatility. So it's like the Fed turned the markets upside down. Everyone is not knowing what is the next step, what will happen here if some major banks will fall out and there will be more issues with the banks, or if it's just cooling down now and it's a nice level to take on more longs. Nobody knows, and therefore we see these big changes here in volatility. Yeah, sugar is in backwardation. I know, Mirko. I traded against the future curve. That's it. Sometimes you have to take the risk if you want to make big profits. Let's go with what do I have here on my list? Yeah, gold. I wanted to show gold to you because we are moving above the 2000. So yesterday we had a high point at $2,006, and today again we are above the $2,000 area. So we probably will retest the previous high points here, $2014.90, and even maybe go higher. Why? We talked several times about this. The gold prices is affected by the interest rate expectation, and when the interest rate expectations are lower, and this is good for the gold because there are less opportunity costs, because you can just put your money into a savings account and you would earn high interest amount right now with 5%. But if this drops and if there's still a high inflation, then it is your money is at risk, and therefore you can put it into gold and gold should cover your inflation losses. And this is what is happening right now. The market prices in the inflation risk and the lower interest rates in the future. But of course, when the market drops, then normally also gold should drop finally. So I wouldn't wait for too long to go long here. But yeah, it's a clear breakout above the previous high points. We see this breakout, smaller rejection, breakout again here. So probably we will see higher levels in the next days and weeks here for gold. But finally, when we have the recession, I don't want to be long in gold anymore, because I think we will see a big recession beginning or end of June, and then finally a sell-off in the stock market, and gold will also sell to the downside again. So don't be too long in a long trade here on gold. Euro USD, the currency, also important for gold. Why? Because gold is traded in US dollar. And the previous days, look at this big move here in just 5 trading days. We went 3.8% to the upside. So euro was gaining here against the US dollar. So US dollar was going weaker, and therefore it was cheaper for foreign people to buy gold in US dollar. And yeah, this can offset the higher prices of gold. And therefore it's always have a look at the different currencies when you want to trade gold, because if you have a weaker US dollar, then the gold price can rise. But when the US dollar is gaining, like today, look at this big move here back from the previous highs. So we had a Fibonacci level here, look, and there were some previous high points. So this acted clearly as the resistance yesterday and the day before yesterday, and we are now selling off to the next Fibonacci level here, as you can see. And this strengthening of the US dollar means that money is flowing out of the euro and other currencies and going back into the US dollar. But with a stronger US dollar, gold gets more expensive for being bought in a foreign currency, and therefore it's not good for the gold prices. Yeah, so keep this in mind if you want to be in a long trade for a longer time in gold. When the US dollar is getting stronger here and euro USD pulling to the downside again, it's not a good sign for gold prices finally. Okay, then I think we covered the most. Yeah, let's just talk about Tesla again, because I wanted to short it here right at the important psychological $200 level. So we had this shoulder head shoulder formation, then the big sell-off here with lows at $164. Then we went back, retested to 200. As you can see, this was a major resistance. Then we finally broke above with the better ratings from, I think it was Moody's, good sales numbers in Europe and good production numbers in Shanghai. We went to high points the day before yesterday at $200.66. And look, this was a previous high here, $200.48 on March 3rd. And therefore this acts as a resistance here. And now we can have lower highs. This was a high point, lower high point, lower high point, or same high point here. So if this is a high point and we go lower, then there's some more potential to go lower here, retest the previous lows and retest these lows here from January 26th and finally close this open gap down here to $145. So there's some downside potential here, up to 24% to the downside. But I don't want to short the stock because you see here the high implied volatility, and I'm an option trader. So I want to profit from the high implied volatility. Therefore, I would rather sell short calls here, or a bear call spread, just to be secured if the stock is rising and turning to the upside again. So selling a bear call spread here and profiting from the stock dropping and profiting from the high implied volatility. Of course, the implied volatility will probably rise further when the stock is dropping really harsh, like we have seen in previous days here at the end of the previous year in December. Here you see how far the implied volatility was rising. So there's still some room to the upside, but as long as the stock is moving into your considered direction here to the downside, then you can still profit from the position and make some decent money. So I looked up yesterday 240 strike short call and 250 strike long call could be an interesting bear call spread. You would still earn about $1.20 for this bear call spread. So $120 for a spread with a lot of room to the upside if the stock doesn't want to hold here this 200 level. In Thailand there's no Tesla, only BYD. Yeah, I think the problem there is that they don't have superchargers, therefore no one wants to buy Teslas there, and it's a high price. So Thailand is a country with a lower GDP and lower income, and therefore the people are not able to afford the high priced Teslas, and they buy just cheaper cars from the Chinese market like BYD. Okay, I have a CCS of 310 March 31st. Yeah, you can also do covered calls here on Tesla, but I don't want to be long in the stock. But yeah, if you are, then it's also an interesting thing to sell some calls here if you believe that the stock is going sideways or getting down a little bit. I don't like to sell calls on my long-term positions here because I believe when I have long-term stocks that they will rise, and I don't want to be called on the positions and get rid of the stocks normally. Therefore, I don't sell calls on my long-term positions, but I don't have Tesla stocks. I only have a Tesla Model 3 that I'm driving as my car, and therefore I can still have the short opinion on Tesla stock here. For Nvidia, sorry. Okay, for Nvidia. Okay, Nvidia has shown, yes, now I see Danielle, sorry. Nvidia has shown major relative strengths. Do you believe it's finally high enough to short? I would never short into strengths, but let's go back to, no, I don't have opened the chart, but I will open it again for Nvidia. Nvidia is one of these AI stocks, artificial intelligence stocks, that's really strong in the previous days and weeks. So we talked about this, and we talked about this major level here, 245, which we tested for several days, and then finally we had the breakout, and look at this huge push through the resistance. So it's really dangerous to short here, too heavy, in a stock which is strong like this. Because look, the market is weak, so S&P 500 is weak. Nasdaq is stronger than the market overall, of course, but Nvidia is one of the strongest stocks here of the whole market. Therefore, I would never short into these strong stocks. Wait for a clear resistance level to come. So let's have a look on a weekly time frame. And there's still some room to the previous highs. Look, 289 is the previous high point. And yeah, if you would say, okay, maybe there is a resistance zone here between the overall high point and the closings of these weekly candles, then it's about between 278 and 289. But we are not there, so there's still some room to get at the 280 and above, and I wouldn't take a short consideration. I wouldn't take any short into consideration before we reach this resistance area. Just wait, be patient if you want to short, and wait until we are in this area. And then you have better probabilities for your short to be profitable because you are shorting a really strong trend here. Look at this, higher highs, higher lows. Don't short this, it's just too risky, there's no sense. Wait for some downside turns here and some more confirmation before you short into this strong uptrend. Okay, So I think we covered the most. Let's just go one time back to the market, and then I will let you trade on your own on this Friday, this rainy Friday, at least here in Germany. It's really rainy today. Back above 12,800, so try to retest VWAP here. So market is still a little bit weak with lower highs, but yeah, almost a little bit of recovery. So it will be interesting to see the market start in about 30 minutes. If we will go to higher highs or make lower lows here, I will stick to my short position. You know my target, 12,510 points. It is a swing trade, so I will hold it over the weekend. But for sure, if we are rising too fast, too high, then I will be out of my short positions and try to short again at higher levels here. Okay, hope I covered the most, and I want to say thank you for this interesting trading week, for you watching my live streams. And if you got some nice insights, then please like the stream, and of course subscribe to my channel if you like the streams and want to be informed I go live the next time. I wish you a nice start into your weekend. Hope you had some decent profits this week, and we will see us next week. Goodbye.